Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey.
What's up, buddy? How you doing?
Good. No sweater day. It seems to be getting hotter.
It's got a little warm over here.
Nice.
Do we have matching shirts? No, we don't have matching shirts. Okay, that's good. Gotta get some Options Geek t-shirts. That's what we need to get.
Coming soon.
So this market is resilient, to say the least.
Oh, crazy.
It just keeps going up. It's like it's incredible. It's I think it's like 13 days in a row. Which there's this technical analyst, famous. He used to work right next to. He became famous because he was Steve Cohen's right-hand guy. He wanted to be. Steve Cohen would pay him a lot of money to hear what he had to say every day. His name is Tom DeMark. Tom DeMark. DEMARK or MARCK, I believe. Tom DeMark. And he's got just look him up. It does cost money to look at his stuff, but Steve Cohen swears by his method and swears by you can, I think it's in the book. He talks about Tom DeMark and really loves what the guy does. So people always ask me about technical analysis and the basics and whatnot. Tom DeMark is a little bit more complicated, but you got Steve Cohen saying he's good. It made him famous over the last 20, 25 years. Nice. So if you wanted to look at another technical analysis process and methodology, then I would recommend something like a Tom DeMark. But to get the signals, because he has these, it's like a 9 setup, but they're counts. There's these counts, a 9 setup and a 13 setup. And basically today's close has to be, in order for the count to keep going, today's close has to be higher than I believe the fourth previous day. And if it is, that's 1. And then if the next day goes up, and that's between the 4, and then what you get is a trending stock going up. So you're looking at it, and you get, usually the setup is the 9 count. When you get to the 9, then it's, you're looking for a reversal. Now we're up to 13. So sometimes when it goes past 9, and you're still going up, he sort of says, be careful. Like, this is a very, very strong market, which you don't have to be a rocket scientist to see that this is a very, very, very strong market. So, here's let's take a quick look. I'll show you just quickly what this is, just to give you an idea. And if you wanted to go look further into it, his name is Tom DeMark. But essentially, if you started here, right, and you looked at this, let's look at my inspect here. So if you look at this date, and you would see the closing price, okay, 389.70, 4 days, 1, 2, 3, 4. The close is 389.48. So this is higher than this. So this would be 1. Then this close is higher than this. That would be 2. This close is higher than 1, 2, 3, 4. That's 3, 4, 5, 6, 7, 8, 9. Okay, so that's a 9. And if I'm doing it correctly, that's 9, or that's this one's 9. If this one, for whatever reason, not counted, but you have somewhere around here where you're looking for a reversal, or you're looking for a good sell setup, but it's not going down, it keeps going. It's 10, 11, 12, 13. It's interesting. It shows you how strong this thing is actually moving. Here you see something like this isn't even 1, 2, 3, 4, 1. Okay, so this would be 1, 2, 3, 4, 5, 6, 7. There's 7 and 9 counts, and then this would be the 7 count. And it's an interesting thing, but it's 7, 9s, and 13s. I think it's worth a look, and you should see stuff on YouTube or on even just Googling it. I think it's worth a look. And Steve Cohen says it's worth a look. It's worth a look.
Nice. All right.
Cool. The what are we seeing today? It's kind of a slow day. I looked I usually, look twice in the morning. The first time I looked, there was nothing. The second time, it's still a little bit light. There's always, I can tell you this, always in front of earnings, people are setting up for risk reward. We've been seeing that over the last week and a half. They're setting up for risk reward plays. They're setting up. They're doing essentially what we've done. They've been doing this, and they see, like we see, that the stocks have all made a significant move, and they're all trading near the top of this range that we've probably looked at over the course of the last 2 months. And so what they're doing is, remember, most people think that some of these hedge funds are always trading options. They trade options and everything. The reality is they predominantly trade stock. Okay, so they're always looking at the risk reward on their stock portfolios. They trade options only in very specific moments in time. The game we're playing, and why it appears that everybody's trading options, is because we're playing a game where we are isolating what the big guys are doing. And so it looks like they're doing this every day in every single one. But in reality, there's 20, 30 hedge funds that are trading options actively, maybe 50 that are trading it actively, and we're aggregating those, so it makes it look like they're doing this every day. The reality is that hedge funds are trading options, again, very clearly. Look at anyone's portfolios, and they'll have maybe on average 2%, if they're really active, like Melvin or Stevie, 3%, 4%. So if they have 100 positions, 4 will have options. So Steve Cohen and Melvin Capital and those like Maple Lane, they might be closer to 7 to 10%. But the average is going to be 2 to 3. Just look at any portfolio. They'll have 100 names, and maybe only 2, 3 names have options. Some have 0, some have 1, 2. And that's because, again, it's exactly what I've been teaching. What I tell you, they look for very specific moments. And if they don't find that moment, they just trade the stock. Right. Okay. So don't be confused that just because we're looking at UOA and there's a lot going on there, that everyone is trading options and their whole portfolio is options. What Options Geek has devised is essentially a way to play unusual options activity, to play what they're playing by playing a probability game. So it's very important. I think sometimes people get confused with, you have to always be trading options and what's there to do today and how to do it. Sometimes the answer is to not do anything, right? To sort of play it a little bit different. We could talk a little bit about that later. Maybe there's, just long-term strategy, because in this type of environment, the SPYs are up 20 cents. It was down 20 cents. It's up and down 20 cents. Yesterday did the same thing. Trading, you're not going to make a lot of money trading 100 volatility options, back and forth in this environment. And remember I told you when the GameStop and what did I tell you? You can go look during those videos during that time. I said, they lost? Probably the market makers have lost a ton of money, but be very, very careful with these names, right? They're 120, 140, 200 vol, 250 vol. Be very careful flipping in and out of these names, because the way they make their money is ultimately over time, they're going to squeeze every last drop out of you, right? The volatility is going to come down. The flipping back and forth, the bid offers are wider in some of these names. You get eaten up alive over the course of time. So everyone in a lot of these names is looking for these big moves, and the big moves are not happening. It used to happen where, stocks are making 30 to 50% moves in 5 days, a week. And that used to be 100 names. Now, maybe 1 or 2 names are doing that, 3 names, and everybody's in calls and looking for that big 1-2 week moves. And the market is not giving you that. And it's punishing that volatility. It's punishing the volatility, the moves in the stocks up and down. Remember, we're on the other side of the mountain for most of these names. And the only advice I had given you on the other side of the mountain is be really, really careful with any vol over 100. Be really, really careful. And we've done that. And I've shown on these videos many times the reason why, the logic why, because there's a lot of people stuck now in these names. And if it goes up, they're selling. And that's going to reduce the volatility on the upside. On the downside, people are going to still find some value for this fantasy stock or long-term play. And they'll buy, they're willing to, even though NEO might not be worth $15, $17, they're willing to pay 25, right? Because it's come down so much. And you know what? Over 5 years, if I could start buying at 25 and buying at 20, I'm not going to catch the low if the low is 15. I'm not going to catch that with a lot of money. So I'm going to layer into it. Maybe I can average 19, 20 bucks, something like that. That's the mentality. I'm not saying that NEO's even going to get there. NEO's trading okay today, but I'm just trying to give you a sense for, how the bigger picture, how the hedge funds actually trade, what we're looking at, and what we're trying to do on a day-to-day basis. Okay, it's very, very important, because you can get caught up into thinking that you got to do something every single day, and what's the next move, and how do it's not the way the hedge fund guys trade. We're doing something close to sort of swing trading to 10 to 12 positions a month, 13 positions a month, because we need the math to work, we need the process to work to find these things and try to extrapolate some of that edge that we think these guys playing the game have. So the big picture, let's talk through what we're seeing, and it's a continuation on these airlines. We have earnings this week, and I don't know if you saw it, but I see American Airlines again. You see put activity, you see hedging activity. Delta Airlines earnings this week. I believe it's Thursday, and that one's an interesting one. We'll take a look at that one after we see American Airlines. But let's look at American Airlines first, just to kind of get an idea for a lot of the same. We see the volume here for the first week. There should be volume because Delta, when you look at the airlines, you look at the cruise ships, they all trade relatively the same. So if American Airlines, if Delta is going to announce a bad number, American Airlines is probably going to be down. The airlines in general will probably be down. So people tend to play one off the other, especially if they can get the option or a potential big move a little bit cheaper. So let's look at what we're looking at American Airlines just to catch up. Over the course of the last, I want to spread that out a little bit more to, let's call it a year. No, I want to go back 1 year, 6 months. Okay. So we have here, and we've been looking at, sorry about that. We've been looking at sort of this chart for a while. We've been looking at how we framed it, and it's not going to change, right? So we can, instead of saving, I like to show people, but I'll do it quick. We have, this is where we were looking at. Somewhere around here is normal, right? Somewhere around this range is normal. It drops tremendously here, but you can draw our lines. Actually, let's take a look what this does back here. Actually, so we'll call this area normal, and it looked like it tried to get right there, and we saw hedging around here, and we saw hedging over here. We've been seeing put buying and call selling right around this area. We've been talking about it for the last 2 weeks. It's now trading 22. It's come back to the 50-day. But let's look at, this is a level, for whatever reason, that's a level 22.5. Let's bring it right to around here. This is a level, but it's a little close to this. Another level here. I see a stop here, something here. So let's just put something together here at like 18.5. And let's look at something like this right around here. This is kind of like the levels that we're seeing. Obviously, we've gotten through the worst down here, right? But we've been climbing this, rejected down here sharply, and then kind of gradually moved up, came back to the rejection point. Again, had some trouble once, twice, 3 times, and then broke through, went to 26. This is the normal up here. And now we're sort of fighting the 50-day. 50-day moving average moving up is still good. That's still a good sign. But you see there's a lot of air. It's like a little bit of an air pocket. If you look here, it's just one day where we went from 18.5 to 20.5. Right. So if we get through this 50-day at 21.25, say, you could see 18.5. It's in the realm of possibilities, 18.5 in this name, in American Airlines. But again, the point that I'm trying to make is around here, let's use a box. Around here, we have seen hedging, right? And the stock is traded weaker. So the options market, many times they come in early to hedge. And then if they see hedging means what? When you see hedging, it just means that someone is concerned. They either want to get out or they're just concerned that the upside is capped, right? The risk reward is somewhat capped. We came from here. They've been buying all through here. They came from here. It's now 11 to 30. We're at normal. And you're starting to see hedging, and it makes sense to see hedging. This is normal, and we're probably, for the airlines at least, we're not even close to normal. There's this fantasy that we're going to get to normal, but it might have changed forever. Business class and all that, where they make a lot of their money, they're going to have to revamp their business and figure out how do they get to recoup that first class, business class dollars. So so right here, you see the hedging, and it's been weak. So we're not doing anything scientific except spotting that, watching it weak. But now we're getting to a level where maybe you should see buyers, right? This was large on the move up, large volume here. There was some good volume you see here. So I'm looking at these two spots. Let's get back to these two spots right here and here. Okay, up here. Okay, but this looks like people were stuck, and now it's just been trading lower. So this is the frame. This is how we're looking at it, and I just want to do that to show you what people are doing out there. So now they're looking at the 22 calls, the 22 and a half, but you're starting to see more of this pop up, whereas before there was none of this. Right, there was very little once it was American Airlines was driving higher. Here's where it changed, and you just got to be wary of that and respect that perhaps a big guy is unloading a little bit of his position. Not all of it, but they're going to unload maybe 30-40% of it up here. If you had 20 million shares, 30 million shares of American Airlines at $11, you probably don't want 30 million shares at 25. Right? You're going to say, I'm going to take that 25 and I'm going to turn it into, maybe I just want 15 million, or I want, they might target it an actual dollar amount. I want, we took 30 million at $10. That's $300 million. Now that 30 million is at $25 is 750 million. Take off half, right? Take off, at least a third. And that's the risk reward. That's where the shuffling begins. So I think it's important to see that if they're buying these 22s, which it looks like they were today, where do you think where does the stock have to be, or where do they think the stock has to be? Well, buying the 22s here, you're going to say, look at, let's say 24-ish, 23. So 23
and a half.
Is this 23 and a half? Because this is a little bit more in the money, but 20, let's call it 23 and a half. 23 and a half gets them. This is 10 cents in the money already. Gets them. Yeah, that's about right. 23 and a half. I mean, they're not looking, you don't need that big of a move, right? It's only a 50-cent option, but they're looking at 23 and a half to right about here, which is doable. Okay. The other point is that they might be selling their stock. They might, like we just said, they might be selling the stock and they're saying over earnings, don't know what's going to happen, but you know what? I'll buy these 22s. And if it goes to 23 and a half, we're going to make a little bit of money here. We'll sell those, and then we'll figure out what we want to do after we see the number.
Right.
Okay. After we see the number. Mm-hmm. So that's important right there. I think this one is an interesting trade here, because it goes, we're always saying that there's hedge funds buy out of the money options. So in this case here, you look at these 45s, it looks like someone is buying these in the money options. Okay. So when in those cases where you see in the money call buying, or in the money put buying, what they're really doing, if you got to remember, what they're really concerned about when someone's buying an in the money call option, what they're really concerned about is the downside. They're more concerned about where it can go on the downside. That's why they're buying the in the money calls. They're more concerned about the risk that if it breaks 45, it can be disastrous. So just looking at that, that's how I would read it. Buy the in the money calls, let's say pay $4. I'm concerned about the downside. Okay. And I'm concerned about downside because an in the money calls equal stock, being long stock, plus the in the money put. So it's really like buying stock, and then I'm buying the out of the money put. Okay. So I'm buying the stock. When I buy this, I'm buying stock and the out of the money put. It's the same thing. Okay. So I am concerned about what? Where's the leverage? On the out of the money put. So here I'm concerned about the downside. That's the signal he's telling us. That's what the mindset is when you're buying that in the money option. That's the signal. He's basically saying, I am cautiously optimistic, right? I make money if the stock goes way up, but I am concerned about the downside. So we did Delta Airlines. It's going to look fairly the same, although this looks a little bit more constructive here. It looks like it's just been moving. The highs have been, this is a lower high, but looks a little bit more constructive. And maybe, you see this gap right here?
Yep.
Right? We're looking at 55 AAL looked like it had gotten to sort of the normal range from where it dropped. 55 to sort of 62 is where this COVID, it went down because of COVID. So, if they think it can go up, yeah, they're buying this because they're thinking, okay, it's gotten down to the 50-day. It's bounced off the 50-day almost since here, right? Bounce, went through a little bit, then right through, a little bit right through, 50-day, 50-day, 50-day. Here's a shot. We'll take a shot here, Delta Airlines, that the recovery is going to continue. Earnings is probably not going to be fantastic, but they're not going to be terrible, and they probably have good things to say about the reopening. That's the idea. However, if it breaks this, goes through this, breaks 45, we could see where probably at the very least 43, and then you start thinking about 38.
Mm-hmm. Yep.
Okay, so again, just because we're seeing call buying, that doesn't mean it's rah call buying. It's so super bullish. This in the money call buying is telling me exactly what we've been seeing: cautiousness, hedging, put buying, and the like. So that's leading right into earnings, and we've been seeing that on a lot of earnings. And why would you see it on a lot of earnings? Well, because the market's gone up 10% in 6-7 weeks. Okay, so
right,
it's important. It's important to we're using the options to sort of read what the big guys are thinking. And again, I said it yesterday. Who controls the market? It's those guys, the big guys. The big guys that you see them hedging, buying, but usually hedge funds don't hedge like that, right? They're not hedging means you want to stay long the stock and you just kind of like between this range and maybe you're just trimming. Hedge funds, if they don't like it, they just get out of the stock, right? In general, they have 5 million shares, it goes up, and all of a sudden they get worried about it, sell 3 million, watch it. If it keeps going, sell the other 3 million, right? BlackRock is long 30 million shares, goes up. They're not trying to get out. They're trying to sell 10 million shares, 15 million shares. And while they're doing that, the trader says, I can make some money selling 10, 50 million shares. I'm going to collar it here. That's your signal. Okay. Right. That's your signal. It's very important to understand that. You're not going to hear that from a lot of places. This is experience, knowing how these guys, knowing people who work at these places and knowing how they think about it and understanding that they're there to make some money off of their own trades as well.
Right.
Okay. So that's Delta Airlines. That's the airlines. It's what we've been seeing. Again, I invite you to just go back into the YouTube channel and pick up, some of the stuff we've been talking about and seeing what people have been doing and how it's been happening over time. I think it's a good exercise, especially to continuously watch the option story develop. Forget about the fundamentals, just the option story and where they're getting in, where they're getting out. That's really what we're trying to do.
Now, while we're at that, let me actually show you something I've seen in, was it FireEye?
FireEye, okay.
I'll share my screen real quick.
We call buying we were seeing, right?
Yes. So if you look up here, you can just go and click search and type in FireEye, FEYE, and you can see all the times we talked about FireEye, this and that. And now I pulled 2 videos here. So, so first one was March 8th during the live stream. So you can go here and it's all indexed. And you can see we were looking at these Junes it was earnings estimates then, June 20s. And then
they were buying those calls. I remember. Fine.
Right. A couple of weeks later, March 23rd, we've seen some Aprils, 21s, 22s, 24s, all over the place, right? And today I've actually seen some, I think it was May calls. So if you want to take a look at those.
Okay. May calls in FireEye. Let's take a look here. The May 21st. I see. They had bought the Junes before, right? We can look at this. Okay. Yeah, the 21 calls. I think, like I said, when we first saw it, I think it's a decent play here for earnings. It didn't seem, this is a name that moves from 14 to 25, and then comes back from 25 to 18. And now it's trying to, make a turn here and make this move, buying something that's like a 21 call, for $1 and you think you have the answer. It seems pretty cheap, right? If you can get this stock moving back up here. I'm looking at this and the chart looks really good, right? The chart looks, just take a look at something here. So if you're looking at somewhere right around here, right? This thing takes off from, let's call it 14 and a half, trades all the way up to 25 and a half. So 25 and a half. So the good thing is that, you had this here and you had this breakthrough here. You wanted to see this hold, right? So this is 1 day hold. That's not a big deal. But when it's coming down for 2 months and then it holds right there, it's basically saying that these guys, the logic is these guys right here, okay, they see value in the stock. So this is a positive development, right? Because see this right here? These guys were buying 70, 60, 70 million. You see how many shares? Millions and millions of shares were being bought right here. That's not like one hedge fund. That is, that's, you know, usually a big, I'm going to say BlackRock, like a BlackRock buying this. Okay. And they're doing it right here. So when it goes up, they're maybe still buying a little bit. It looks like some here. And as it trickles down, maybe they're getting long. Here, you want to see them, you want to see this hold. I would have liked to see a little bit more volume, right? I would have liked to see a little bit more volume here to say, no, I really like the stock. That would have been even more bullish, but it held, and that's a positive development. And so when they're coming in to buy, what were the dates that they bought the calls? Somewhere around here, I believe it
March
was
8th and March 23rd.
Yeah, so March 8th is right around here. Okay, so the first time they're buying calls somewhere around here, I remember. And then right around here, I also remember, when 23rd? So that would be somewhere right around here. So they bought calls here, they bought calls here, and now they're buying calls here. You see the trend? 1, 2, 3 higher. They keep on coming after these calls. And I don't know if it's the same person, but what usually happens is someone knows the story, someone is telling the story, they tell a friend, you know, the friend takes 2 weeks to do some work. They tell another friend, the other friend, takes a week to do some work. Another, that's how it works. That's how hedge fund A finds an idea. They tell hedge fund B, but they don't tell hedge fund B until they're fully in the trade and they like the name. And then they say, okay, B, get in too, you're a friend. And then B looks at it and they say, okay. And they do their analysis. They say, wow, this is interesting. And then they go in and buy some stock or buy some calls. And then they're involved. And then B tells to 2 people and, down the line it goes. Or it could just be hedge fund A buys all 3 times.
Right.
But either way, you got to like to see that there's call buying here, call buying here, call buying here. And it looks like at each time they're targeting some sort of earnings release or some announcement going into the next couple of months. Positive news, obviously, is going to try to get the stock in this direction, going back to 25. What are they doing today? They're buying the May 21s for $1.23. So I'm just gonna throw 25 there.
Yep.
There you go, 25. Right. So, what I like about this is, and again, when it works like that, when it works like you could just look at it and say, without seeing any options, and just frame it the way we just did and just say, eyeballing it, saying it looks like 25. It looks like if it goes up this way and if it wants to make this move up, 25 is around the range. And then you throw it into the new options chain and you throw in 25 and the pointer lands exactly where they're buying. That's good. That is a good, that is a positive development.
Confirmation.
It's sort of saying you're on it. You know it's a shark. It fits exactly what they're trying to do. And this is, it's interesting. Now you start digging into the story a little bit and start figuring out why the next 2 or 3 months, what exactly is going on and what's happening here. So this is, it looks to me like an executive came in today, over the last week. But I would start digging into the news, going into the earnings transcripts and figuring out what exactly is happening here and why, and really focus. I'll tell you the first thing I do, I would focus on this day right here. I'd like to focus on this and this. I believe they were hacked. I believe this was them when they were hacked. And this was when there was, I think the world was hacked, or there was another big hacking and they were involved in trying to save the world. So, this is, you want to look at the news here, you want to look at the news here, and then you want to look sort of as it's going down here, what's really happening. Why was it going down? Was it just the market? Why was it going down? And why is it going up now? Okay.
Mm-hmm. Yep. Nice.
Good. I like that. And definitely use of the previous videos is going to help a lot. So
right.
That's helpful. What else?
I have a quick one before we get into that, guys. If you want to help us out, please like the video. It really does wonders for us. Now, a quick play I've seen is in Coca-Cola. Let me see where it is. It's like a setup.
Coca-Cola.
It looks like a roll down into earnings from the 30th. So if you want to, we can go into that.
We've always liked Coca-Cola. Coca-Cola is, it's a sleepy stock. It only trades like 20 vol. So it's not going to have these huge moves, but still, if you can catch the move when it happens, it's it's quite rewarding. The stock, just looking at it before we go into the stock, looks strong. It's like the market. I mean, it's made this large move, but this, they call this almost like a cup, right? Almost like a cup. It goes like this, and then it's like this. All right, so you have this cup kind of thing, and then cup, and then this is like a handle developing, right? I don't know. That's the way I look at it. But you see this coming in like this. This is basically saying it goes down over a few months right in the beginning of the year, comes back up. It's strong, and then after this move from 48.5 to 53.5, it goes sideways. That's always a positive development. Remember, stocks go up and down. This sideways move is positive, and it looks like, remember, this was normal. Let's call it somewhere around here was normal. So we're looking at 57.5. 55. Positive news on earnings probably wants it to get up to, just eyeballing it, I would say, I'm using this top right here, eyeballing at 56.5, 55. What are they doing? Call buying?
Yes.
Okay, so let's look at call buying here. Coke for earnings.
Yep.
Probably looking for a little, it's so cheap, 18 vol, that they're probably willing to go a little bit further too. So May 21, you get some here. Okay, but where is it?
Earnings, yeah.
April 23rd, 9,000.
There it is, yeah.
And what did we say? Let's just look. 56.5, 57.5.
Okay.
Let's just throw 57 in there. Too much. 56, 55. So it looks like more like 56, 55.5, 56. Yep. 55.5, 56. So you only need it to get up to right here, but it's still, close to that sort of earnings level. But again, it's really just a one-shot play for earnings. But they're going through what they're doing. It's pretty. I mean, Coca-Cola has what seems like a million brands, and if they can get it right, and I think they were trying to segment regions or product lines, and they got management all over this. And Coca-Cola management, like a GE management in the past, is one of the best managements in the world, right? And branding and whatnot. So it just takes time with some of these things. But I think with the reopening of COVID, they should be all right. I kind of like this play. I've always liked Coca-Cola. I like stocks that are going through changes, because it's always difficult for Wall Street to sort of figure out what that change is going to add up to, right? Whenever there's change, there's a lot of guessing going on, and guessing is what creates the opportunity. It's the same thing. We talk about football and DraftKings, joke around so much, and up and down, and who knows where it's going to go. The reason why it trades so volatile is because there's a lot of guesswork in the analysis. Coca-Cola, for the most part, there's not a lot of guesswork until they decide that they're going to revamp every product line and revamp how they look at segments and geography segments, and all of a sudden, the analysts are sitting there going, well, what do you think about this? How do you do this? What's this going to be? They want something that they can grab onto. Nobody really knows, right? If it's the right decision and it works, and everybody starts looking at the brand in a different way in one country. I mean, what they were trying to do is they were spending so much money in small little countries and trying to fit all their products in small little countries, which you can't sell Coca-Cola in the same way that you sell Coca-Cola. You can't sell Coca-Cola in the United States the same way you sell Coca-Cola in Britain, the same way you sell Coca-Cola in Russia, the same way you sell Coca-Cola in China. So they needed different teams in every single place. What they're trying to do is actually saying, you know what, we just need a team that's going to sell Coca-Cola, and sort of reduce this massive expense of having teams in all these different countries. So it's a big change, and if it works, it's good. It does reduce costs. And again, COVID's going to help it with restaurants, and all that. So I like it. I think that an interesting play. We've always liked Coca-Cola, and obviously we've played it a couple of times. Yeah. It's tough to catch. I think we may have caught it, but I like it. I like Coca-Cola.
Cool. Nice. All right. One I have next is retail is GPS. So Gap stores. And I'm not really sure what's happening here. So
Gap stores. So what have we seen over the last 2 weeks? We've seen hedging, people getting into more Walmart. So people moving into Walmart, but then hedging in a lot of these retail stores. So Gap looks like a good chart. Let's just look at a chart quickly. Here's a high. It looks like it's having trouble here. And here's this level. So you're talking about 26.5-ish. And here you could see, so when I'm looking at highs, I always look at this MACD and this MACD here. Looks a little bit, if it turns here, looks like it would be a MACD diversion. Look at RSI here. It looks like a little bit of a diversion. So it's probably showing, technically it's showing a little weakness here. And again, the backdrop is retail has been being hedged over the last 2 weeks. So what are they doing?
No idea. No idea.
No idea what they're doing.
Yeah,
Perfect.
I'm really confused. Yeah.
Okay, so what do we see here? One. And sorry.
Refresh. Yeah.
Maze, right? Sorry, refresh here. Let's see here. Okay, so we're seeing 30 calls and 32 puts. Okay, in the money puts and calls. Okay, but this one, my eye immediately goes here. So it looks like this might be closing. So selling 30 calls is my guess. Given the backdrop, given what we've been seeing, given the stock has had a big move, my guess is going to be that they're selling calls and buying puts. Is my guess, given everything we've said. So we have here the 275, 95, 279, 280, 275. Okay. All on the bid side and volatility trading at around 48, which is a little bit higher. It looks like I'm going to look very quickly. Hold on for a second. So it looks like it's I want to know what the 30 calls have done. That's important. So I'll just do it real quickly. Give me 1 second.
Okay.
Okay. So to me, the 30 calls this is a sale. Okay. And let's take a look just from looking at it historically. I just looked at that trade back in the past. And then here, they came in here, 205, 205, 215. Here looks like a sale. I'm sorry, a buy, right? So, okay, that makes sense. More of a buy here. So they came in and look at the time. They come in at night. This is right at the open. They're coming in to pay 205, 215, 220, 220 with vol going up and the stock coming off. So right out of the get-go, they came in to buy those puts. Maybe these are a spread. So did we just look at this one? I think we just looked at this one. 36. Oh, we looked at. Okay, yeah, let's look at this one. Yeah, so this was 250, 254, 255, 272. Okay, so it looks like they bought both, actually. That's what it looks like. It doesn't look like it's a spread. It looks like they just came in and lifted both puts. So, and they came in very early in the morning, 10 minutes on the open. So you look at Gap stores. So look at this, but I don't know if there's any news today, but if you're looking at it, you're saying, I want to get out of the stock. The 30 calls, which they've bought over here, is already made them a little bit of money. So I'm going to get out of my call. Maybe they don't like it anymore. It could be just that it hit the top and said, you know what, I want to reduce the positions. But it looks like they're selling calls, buying this put, and likely the same person. Likely.
Right.
Likely. They came in, it was like right at the open, that they either knew something or they heard something or there's news today. I don't know if there's any news. Okay. Looks like somebody here. So they got rid of Synchrony. Okay, maybe there's something going on here. It looks like it doesn't look like it's a lot, but I would say it goes with the same thing that we're seeing, and it looks like someone is actually selling out of some stock here and using the options to do that. So here, a lot of times, what people don't understand as well is when you can get very good liquidity in the options market through the options. So when someone is coming into me at Bank of America, and I'm there, doing my own thing, and someone says, I want to buy 5,000 gap puts, right at the open, that you're talking about, it looks like 5,000 traded there.
Right.
That's, in the money options, you're talking about 300,000 shares of gap right on the open gap stocks. I might not be able to get that stock. I got to get my hedge off, and I'm not sure, I want to do that. So what happens is you try to take it, you try to do as best you can and whack the stock and hit the stock to get your hedge. But they're doing that because it's likely that they can get good, if they try to just sell the stock in the market, the prices are going to go a lot lower quickly. Here, they're using someone like me to come in and buy these puts, and I take the risk of where the stock goes, right? They just get the puts. They're willing to pay a little bit extra in premium, but they get their hedge off. Does that make sense?
I see. Right.
So that's what it looks like. It just looks like more follow-up of gap stores. But I'd actually, if you're going to play gap stores, I instead of, they're coming in here to pay 47, approximately 47 vol in the maze, I would say spend a little bit more money and buy the, maybe the 30 puts in gap stores if you were concerned of it going down. So something like the 30 puts looking at like $24. So, it seems like a tough sell here because you got to get through, there's a buyer here. So
right.
that volume, right? You got to get through 27 here, and then 24 is this level where there's a gap here. This is the level over here. So I would say right around 23.5, 24. So if you're negative on the market, you got to be a little bit negative on the market. You got to be a little bit negative on retail, which in general we're seeing the retail part, and then gap stores, we're seeing put buyers here, but 24 seems like it's got to break through this in a short amount of time. One to watch. I would say that the reason why they're probably buying in the money is because there's, thinking that it's going to go to 24 in the next couple of months, maybe a stretch for them. Maybe a stretch. Okay.
Fair enough. Cool.
Good. And what about any questions? Questions.
Okay. Yeah. We had one question yesterday I wrote down. It's you see many companies at 52-week highs. How do you set your targets? Do you trade them at all?
Okay. Yeah. So yes, this was Thomas. Thomas had put this question on. I answered him. He sent me an email yesterday. Look, it's no setting the targets is no different than when we're setting the targets here, right? We get our targets essentially from either technical analysis or the options play. So when someone's buying options, we're trying to back out what they might be thinking, right? And that target is going to be X. When we look at we then turn to the technical analysis and we look at where it could go. That's also something that we have to consider, right? On a breakout, how big is the range that it's it's breaking out from? Can we push that up? So we're always trying to frame it, whether it's through the higher or lower. Even the SPY, the SPY keeps moving up. We had our frame just because we had it at 410. That doesn't mean we stop thinking it can go up. We now have to say it's gone up this much. What's the next level? That there's no resistance up there. That this is all-time highs, and so you have to be, you have to start getting a little creative up there, because if you're trying to say what could be the high, nobody really knows. It's never traded up there before. So right. I think that the issue, however, that being said, where you don't know where the high is, that being said, is you have to think about how are the big hedge funds and the big players, are they reaching for calls here after the market has gone up 10-15%? Are they reaching for calls in all of these names? I think they're being more specific now, and I think that it's important to understand. It's, again, go back to what we were saying earlier. It's market's up very big in a short amount of time, and when you buy out of the money calls, if you get just a small pullback, we might not. If you have 1 month calls, it's not going to work. Right. So, I look at Options Geek. I'm trying to do here is we're in good stocks. I'm not concerned about the stocks. It's always the timing. Right. And I think that it's important to understand that it's great. It's great to find the 1 month option, pay $1 and it works. And you hit it for 500, 600%. But you run the risk when you're buying these out of the money options that you have 1 or 2 bad days, and it becomes very difficult to pull it back. Okay. With the longer term, you have 2-3 weeks that are bad. And as long as you're managing that and you're hopefully you're not fully in a position. If you are, then, you can get stopped even on the way down. But if not, you could sort of have this wider range to look at things and sort of say, oh, okay, this is, we were wrong on my first entry, wrong on second. And now we're able to get back. We're able to get back in maybe at a different spot or even roll down or do something to protect yourself. But if you're in a full position and that happens, then, you got to be stopped out and it is what it is. But I would say it's no different. The answer is it's no different. Framing it the same, thinking about the same thing. Usually the way we work is we're taking our cues from what the big guys are doing. Where do they think it's going? And we're using the new options chain to figure that out. Nobody's ever taught that. Nobody's ever tried to explain this. So when using unusual options activity, most people are just trying to chase for the 1 or 2 days when something's happening. This is a different way. It's a more analytical way to approach UOA. And I built a new option chain to give you that missing piece of the target stock price, right? Forget about your target stock price or my target stock price, anybody else's price. What do they think? What is their target stock price, or what is the range of their target stock price? That's what the options market's telling you, right? And for the first time, I'm trying to show everyone how to actually get that. So that's how I would answer that question.
Okay, fair enough. Now you mentioned, not getting in a full position. That's something that I was looking at UPS today. I think that would have been a good strategy.
that was. I mean, UPS. When we got in early February. I mean, for the first 5 weeks, let's look at UPS. I mean, this is a perfect example of, we were in a mess in January, February. The market was, who knows going to do who knows what, and but we looked at this chart. And, we put the story together to understand what's actually happening here, right? We're looking at this move here. And after looking at the story, February 10th, we got in right around here, perfect for almost the highs here. And we're long, okay? We're long calls here. And, the stock goes down for basically 2 weeks in a row, tries to make a move back up, down again for another 2 weeks. Now it looks like, it looked like the worst stock in the world down here, and it looked like it was going to break. But now it looks like the best stock in the world, right? It looks like this thing, I believe again, you can look at all the YouTube videos. We're one announcement away from this stock making a $20 move higher, trading $200 because they're going to raise prices by 10%. Okay. Or FedEx. So there was actually an upgrade in FedEx today by, I think, KeyCorp. They raised FedEx. They talk about, operating leverage and a bunch of good things, but they're both almost the same. They have a monopoly on, basically have a monopoly over the delivery services. And this chart looks tremendous right now. But the point is that you had to take a lot of, if you have one option, you're probably stopped right around here. You don't even get to see this move up. And then if you still have one option and you actually held and it goes here and it goes back down here, it's almost like you're stopped again. And then you give up and then it rips. If you're playing this, we have June options, and in June we get the earnings and we get this. The whole point of this idea was that there's an analyst meeting in June. So not only do we get the earnings, we get this analyst meeting where the new CEO, this woman from, she was the CFO of Home Depot, she comes in and she's cleaning house and getting rid of customers if the margins aren't good. She's just doing all the right things that a shareholder wants to hear. And she's going to lay out her plans. And I think her plans are going to be awesome. And I think what she's done already is she's going to show that she's already executing on that plan. And you're going to get this double whammy of, oh man, this is a great stock to own. And by the way, it's now turning into this drone delivery service, maybe because they bought this new company. It gives it a little bit of a tech flavor, and all of a sudden you got some excitement around UPS, the guy you see delivering your stuff outside, which seems old and boring, but now it's a very exciting company, which is why we were in it, right? We're waiting for that moment for people to realize the story that that a few people are dreaming up in the background and saying it's still a good stock and it's a monopoly and all the things we just said. So, you got to be in it, and nobody knows when that's going to happen. But at the end of the day, UPS is a good stock. Okay. And that's what we're doing. We're picking good stocks. We may get the timing wrong, but in general, we're picking good stocks. Okay. We're picking good stories, good stocks, good ideas. That's the best we can do. And we're doing it behind options activity that we're seeing.
Right.
Okay. And in an environment where it's rough, where in January, February was kind of rough, what are we doing? We're buying 3+ month options. So we had an idea out today. We're buying 5 month, 6 month options, right? We're buying longer term. Why? Because if we get out of if the market comes off here, I don't want to be stopped for the 2 month option, something like UBS, and thing goes up. I'd want a 4 or 5 month option where I'm going to be in the name. It's not about winning in the first week. We're trying to catch a move, a large move. You know, take a look at Oracle. We've talked about Oracle on the podcast. We bought, it was February, we bought September options. You've probably traded it 10 times already.
Yeah.
And, you know, and it's that's fine. Or the person who's just sitting on it is doing okay. Probably better than trading around and messing around. Just you sold it at 100%. It went back down. Now he's got 6 months to go. Now it's at close to 150%, and you're getting ready to take out your next. And it's a sleepy stock, but it just keeps going up. This is how we want to play the game, trying to get away from the emotional 2 day to 1 week, 2 weeks. We're trying to find those biggest stories either up or biggest stories down. And again, it's the best I can do to give you. So the rest is strategy and how you play it. But that's the best I can do. Some people are much more patient than others. And in this game, patience pays 100%. Okay. So there you go. UPS looks like a disaster. Now it's the best stock. It looks like the best chart in the world, breaking out, trading methodically straight up. They just bought a company. It's a tech. Is it a tech stock now, or who knows? So we're I don't know what to say. We want to make sure that the story that we're thinking about, we want to give it time to unravel. And if it's not working and we have a full position, then okay, then you got to get out. All right.
Fair enough.
How about yesterday? I know yesterday I did give. I just saw it peaked over here, and I usually don't, but I think I did give some homework yesterday on ARK, and I also said on Netflix. Right. I wanted to make sure people look and the idea. It's only me trying to help people understand what's the possibilities. Right. So in ARK, the reason I asked you to take the top 10 positions and to see where things were is because I wanted you to see that 6 or 7 out of the 10 are still way above their 200-day moving average. There's a few that are already down below the 200-day moving average. That 200-day moving day average, once it breaks that and it starts trading there for a while, that's telling you that it's a weak stock, and it's hard to recapture. It needs not only the market, but it needs actually new buyers. Okay, so that moving average is sort of giving you again, longer term directional view on where that stock could actually go. So that was the homework. I don't know if there was a direct question. I'm not going to be able to find it now on the comments, but it was really to eyeball and see 10 names, how far away from the 200. So on a pullback, you have these 10 names that could all pull back. They're 20+% away from the 200. So it's a race between time. As time goes up, this 200-day keeps moving up. But if we have call it in the next month, a pullback, it's not going to pull back enough that these stocks are going to start getting drawn closer and closer to that 200. Mm-hmm. So that was the ARK, just to visualize what it is that you're buying an ARK and understand it and see also what could happen if she decides to get out. That's one. The second homework was Netflix, looking at Netflix in 2010 and then looking at Netflix in 2020 and understanding and visualizing how much video content they had then, how much they have now, and how much of that as a percentage is original content. That was the whole story with Netflix. Netflix wouldn't be Netflix if they didn't catch. I call it, House of Cards was a big deal for Netflix. It was a great series, and everybody jumped on Netflix to get that series, and then thought, wow, once they had that good series, they're looking around and going, this is fantastic. It's only $10. I think it was $9 a month, $7 a month, whatever. And they got everybody on board, and since then they're raising prices. But what they did was essentially take their money and made a huge bet. And they said internally, we got to do original programming. And then the bet was, can they make enough original programming? Original programming that took Disney and MGM years, decades to build up a library. Can they do that in 2-3 years? Well, they just took billions and billions of dollars and kept producing original content. And now their strategy is always original content. So that was when you go look at those two charts, okay? And you could just Google Netflix 2010 versus 2020. Just Google that, and people will have the charts, original programming. And when you can understand that, you can understand the game the shorts are playing against the long. Nobody knew whether or not Netflix was going to win or not, and Netflix was nowhere near what it's valued right now. Nobody knew, but if they won, the prize was significant. So in the same vein, when you look at DraftKings and Fubo, can they each of these do whatever it is that the fantasy story is? Can they do that? What is the negatives against them? And start thinking for yourself, can this happen? Forget about what the analysts are saying, what everybody's saying is, can it happen? Does it make sense? There's one thing, I'll give you a positive on Fubo, which I put on the comments because someone wrote, listen, it doesn't matter to me if someone disagrees with me. That's okay. It's how you disagree, so if you want to disagree with me, for sure, put it on the comments. I have no problem, but I'm not going to allow other people to get name called, for me to get name called. That's not how you talk about the pros and cons. So here's a pro on Fubo TV, okay, that I gave to someone who told me why Fubo was positive. I said, throw in this too, show me this, and maybe I get really excited about Fubo TV, right? In 1979, ESPN started. You know how many viewers were on ESPN in 1979? 30,000. Nothing. It was zero. Now it's millions. How much is ESPN worth right now? 50 billion. So what would start making, and I'm sure, if I'm thinking this, I'm sure the CEOs, they got a plan. But how long will it take for them to develop some sort of show? I mean, you have all these sports going on around Fubo, right? They have hockey and baseball and football, and maybe not football, but they have some football. They have soccer for sure. So how do you create an ESPN around all the different sports and then tell people like, hey, this is playing on this channel, this is playing on that channel, right? How do you put it all together? Look, ESPN started with two guys in front of a TV, one guy, and then a second guy, and then all of a sudden they had one guy with a great personality, Chris Berman, and I think his name Chris Berman, and he was awesome, and he, that became ESPN. It was nothing when it started. It started with a few $1 million. So it's now worth 50 billion. Can they do something like that? That would be interesting. That would be interesting. Just the right. ESPN. So these are things that I want you to think about. And I asked you to do homework to think about. I asked you to go review some of the old videos that we talk about to think about what we're seeing. I'm not a wizard. I have no idea where any of these stocks go, but what we're looking at is good stories, good options opportunities, and and then a strategy to try to stay in the game, to try to take those profits. Okay.
Yeah.
Good.
Love it. Awesome.
What else is there?
You want to take a look at Ford?
Ford.
Yeah, kind of a
lot of. Ford is. They have their Mach. What is it? The Mach E. Everybody's excited about that truck.
EV,
yeah. It's so we got Ford here. There's just been a lot of put activity just in general in Ford. We've been seeing over the last month. So I'm not sure what to think about it. What are we seeing today in Ford? September
puts. Yes. There it is. Yep.
I think these were bought a while back ago. I'd have to again go look at the data, but I think they were bought 46.7. Traded a little bit higher today. 923.24, 53, 54. This just could be chasing here on the bid. It looks like they might have been sold here. I would consider that they were sold. I'm not exactly sure, just by looking at that, and I don't know. Do I think Ford trade can it trade down to? This is a big. Take a look at the RR dollar here, right? So we would have to think by September, $8 less, $7. To pay for a way out of the money put 50 cents, $7. Maybe talk about 750, right? Closer to 8. So 750 closer to 8. So call it 775. Probably still gets you right around there. Okay, so 750, 775. That would make the option worth two. Let's call it 7.5, 2.5. So paying 55 cents for 2.5. It is about 55 cents to make 195. So call it 350%, 375%, something like that. Call it 380.
Mhm.
So 380%, 380% on that. Actually, just look at that. What is it? At 7.5. It's close. 362. Okay, got to sharpen up the mascos. 362% returns. It seems a lot to think that it's got so much momentum. I mean, everything's got to fall apart for Ford to get back down to 8.5. In my impression, I mean, you're talking about from 12 to 8.5 is 2.25, 360 on that. It's a 25% drop from where it is. Look, it started the year at 8.5. So can it get there? Yeah, but I think this is sold today. So somebody was playing it for whatever reason, sold. I'd have to look a little bit for it. I get nervous when I see a lot of trades happening in the put side in a name. And over the last few weeks, Ford, for whatever reason, has had a lot of put activity. Okay, so that means something conversations are being had about the downside of Ford. Okay, conversation. Right. Okay, so so this is something that I would look at. What else? You know what I see today? One that's interesting. Maybe we'll end up. Do we have more time? What time we got? Almost there. Okay.
Yeah, almost there. We can do one quick if you want. What was it? Riot, maybe Bitcoin.
Riot, yeah. Bitcoin. Okay. Take a look at. So I love looking at these names. I don't dare touch a stock that's gone from $2 to $70 and it's hard to, but it's fascinating. Okay, I find it fascinating, and they don't make it easy. They again, it's like one of these 100 volatility names. But let's take a look at the way we look at this. All right, so just looking at this, stock literally was $2, $3. Okay, so big volume here, trades 5. Okay, now it starts making its march, comes up here. So something happens up here, 28, takes a breather. Okay, takes his breather, comes back down. Everybody think, I told you it's $2 stock to 20. Then it just rips. Okay, with Bitcoin. Okay, Bitcoin's trading up, it rips. Yeah. So trades to 80, and now it does this. I mean, it's pretty clear. It does this sort of triangle move. Everybody see this? It's pretty clear what's happening here, right? This is sort of a huge triangle. We'll talk about 80 to 20. I mean, this is massive. Reduction of volatility, though. So you see that the volatility it's intraday. It might be pretty wild, but overall on a weekly basis, it's slowing down here. The volatility, it's coming in. That's what this flag is saying. Okay, the volatility, the range of where these stocks could go is getting shorter and shorter. Okay.
Yep.
Now we're getting to this point where it might try to break out here. Bitcoin is flying through 60,000, 63,000. Obviously good for these types of stocks. And if it breaks this, geez, it's like pick a number. You know what I mean? Like literally, this is, you talk about a $60 move. What's this? 17.5 to 80. So it's 62.5. So 62.5 from, let's just call it somewhere around here at this point, grasping at straws, but 50 plus 62.5 is 112.5. I mean, can it get to 112.5? Why not? Right? Why not? But this huge flag, if you will, looks like they're trying to break this. And if it breaks, my thinking is, man, this could be explosive. And I just, because I watch it, I'm constantly looking at some of these options. And then I see, something like, what did I see today? May? Was it May? They don't make it cheap, by the way. Anything that you're buying out here is not really cheap. But I'm seeing like the May 75s. Did I see anything? What about April's? I saw something over here earlier today. I didn't write it down though. Here, there we go. So yeah, I didn't write it down. So this is what I saw that I thought was really interesting. The 75 calls, they're paying $3 for these things. But the reason I like it is because, granted, it's 100. We're talking about 200, 160 vol, but it's still $3, right? So at the end of the day, it doesn't matter, right? Someone is pushing $1.3 million into the picture here, and they're saying they're looking at what I just showed you, right? Which is interesting. I just said, okay, I'm not off my rocker here. That someone is basically buying this 75 calls, paying $3. So the reality is, if it breaks this and starts going up, $2, $3 for it, it's not going to matter. This thing goes to 112, 115. It's very possible it could. And so this is where, developing your own ideas, looking at different names makes sense. This is me constantly looking at Riot. I've never had a position in Riot, but constantly looking at it and wanting to, if I wanted to throw a chip in the game and saying, you know what, I haven't been long Riot at all, but you know what, $3, buy a little bit here and just watch it for the next 3 weeks. And if Bitcoin does this $75,000, $80,000 move, goes to 100,000, where's Riot going to trade? It's flying, right? And I think someone is playing that. Someone is playing just exactly that they're looking at this technical setup. It's reaching at the top. So there's an idea for you on how we talked about the Coca-Cola earnings. We talked about American Airlines, Delta Airlines earnings. We've talked about AMD, how to play earnings for that. That's another name that we've looked at in the past. So there's ways to play if you want to play a smaller game where you're just taking a shot here and there and playing these big moves. That's something that I think is interesting. We have Bitcoin. It's not coming down, Bitcoin. It goes down 10 grand and pops up immediately. So the currency, or whatever, the cryptocurrency has been resilient. It's trading at 63 at the highs. And you got Riot here. It's come down with volatility while Bitcoin's going up. And it's coming across trying to cross that breakout point. I mean,
nice. Yeah.
You got a potential there. And someone now I don't do that without looking and seeing, am I crazy? But when I see someone come in, a big guy come in and pay $1.3, $1.5 million to buy some $3 calls that you would think have no chance of getting there, 150 vol name means that you really do have it. This could easily double.
Yeah.
Okay. That's what 150 vol says. So that's my 2 cents on Bitcoin and Riot, and something to look at.
That was great. Great. Thank you. Thanks, Felix. This was a great episode. I really enjoyed it.
Awesome, man. Good.
And thank you guys. Like the video, subscribe if you haven't, turn on the bell notifications, and we'll see you tomorrow.
Perfect. See you guys.